So I trade crypto fully systematically, as most of you know. So every week I just follow the instructions in my system and buy the coins that it says to buy. And when the market crashed, my system got me out of the risky altcoins into safer Bitcoin and Ethereum. But boy, I still took a hell of a punch. It was like a 60% drawdown. And even though it's coming good now, it was just a terrible experience. And I don't mind telling you, it was just fucking awful. And I thought about, what did I miss? Like, should I have made the system try and swing us in and out of the tops to cash? And the problem with trying to catch every little wiggle is that in 2017, we had 4 mini crashes along the way to the eventual top. And so if I'm trying to pick the top and then pick the bottom and then pick the top and then pick the bottom 4 times and then pick the eventual top, chances are I'm going to mess at least one of those, and really truthfully about half of those up. So the other problem is that picking the eventual top, like the top of the peak of the madness before it all falls apart, that's doable. Picking the interim tops and interim bottoms is much more difficult. Now, what I did is I went and thought about why these things happened, and I did a lot of research. I started reading the financial journals, the academic literature, and it turns out that this phenomenon where is a well-known thing in the stock trading world, and it's called momentum crashes. So I started reading some peer-reviewed papers on it, and I dove really deep, and it turns out that in the stock trading world, when too much money is chasing hot stocks, they become very crowded trades, and they're very prone to not just pullbacks, but actual crashes, momentum crashes. And the academics and the hedge funds and the finance journals, they've all figured out a couple of different ways to recognize these crashes before they occur. And the things that they found for stocks seem to be exactly what we saw in crypto. So what they're looking for is, one, the lowest quality stocks being selected by momentum systems, which, if you remember, that was exactly what happened just before the top, is that these terrible shitcoins started going ballistic, started going through the roof. Like, our system made 63% one week, and we were holding these awful shitcoins like Ethereum Classic. So very similar to stocks, that when the terrible quality coins start mooning, it's not quite the end, but it's a couple of weeks from the end. The other thing that academic literature has identified is that momentum systems have daily returns. When you divide by the standard deviation of the returns of the system, it creates what's called a Z-score spike, which is very, very recognizable, and gives you a little bit of advance warning that it's time to take some off the table. It's time to be a bit less risky. And the third thing that happens is that what's called the pairwise correlations of the lowest quality coins go to 1. So the way I think of it, as the garbage floating to the surface. So what I mean is that just before a momentum crash, the garbage starts floating to the surface. So what's my point? My point is, I'm still in the early stages. I don't think I can get the system rules robust enough that I can pick every top and bottom. I think what I can do is give us advance warning of danger enough that people can lighten their load according to their own risk level. You know, take half off the table, take 25%, take, something like that. So that's what I think I can do. I'm just working on it. So I'm having a really enjoyable research time, really diving deep on it. So Yeah, so pretty soon we're going to have some sort of concrete numbers that we can base all this on, and hopefully, you know, the next crash, hopefully we get a little bit of advance warning. So there you go.